Asian stocks were mostly lower on Wednesday amid fresh developments on the US-China trade front. US President Donald Trump said Tuesday that Washington and Beijing have a long way to go on trade, adding that America could place tariffs on an additional $325 billion worth of Chinese goods if we want. In mainland China, the Shanghai Composite closed 0.2% lower at 2,931.69. Hong Kong's Hang Seng Index slipped 0.18%. The Nikkei 225 in Japan fell 0.31% to close at 21,469.18, while the Topix ended its trading day slightly lower at 1,567.41. Over in South Korea, the Kospi declined 0.91% to close at 2,072.92, while Australia's S&P ASX 200 rose 0.49% to finish its trading day at 6,673.30. Meanwhile, the U.S. Federal Reserve Chairman Jerome Powell on Tuesday reiterated his pledge to quote-unquote act as appropriate to keep the economic expansion going. His comments come amid expectations that the central bank could cut interest rates at its monetary policy meeting later in July. On the data front, the report on Tuesday showed U.S. retail sales increased more than expected in June, pointing to strong consumer spending, which could help to blunt some of the hit on the economy from the weak business investment. Retail sales advanced 0.4% last month, higher than expectations of a 0.1% increase. European stocks lost value by the end of trade Wednesday as trade concerns continued to weigh on global markets while earnings season continued. German DAX closed 0.72% lower, France's CAC lost 0.77%, UK's FTSE shed 0.61%, Spain's IBEX declined 1%, while Italy's FTSE MIB retreated by 0.56%. As for corporate results, Swedish orphan buyer Vitrum shares rallied 10% after the company forecast full-year profit and sales growth. Shares of Swiss watchmaker Swatch Group climbed after it issued guidance for strong growth ahead despite a fall in first-half profits. On the data front, Eurozone inflation year-on-year for June came in slightly higher than initially forecast at 1.3%, but both headline and underlying inflation rates remain below the improvement sought by the ECB, which targets a rate of just below 2%. British inflation matched the Bank of England's 2% target for the second consecutive month. Wall Street stocks retreated on Wednesday, with industrial companies especially weak as Federal Reserve report described U.S. growth as quote-unquote modest. The Fed reported that worries about trade continued to weigh on sentiment even as the U.S. economy keeps chugging along with steady job creation and tame inflation. The Dow Jones Industrial Average finished down 0.4% at 27,219.79. The broad-based S&P 500 shed 0.7% to 2,984.42, while the tech-rich Nasdaq Composite Index shed 0.5% to 8,185.21. In separate stocks, freight rail company CSX plunged 10.3% after it cut its full-year revenue forecast. Executives said activity has declined gradually since the beginning of the year. In currency markets, the dollar demand abated after a rally on strong economic data. Euro USD recovered to 1.1230, JBP USD registered daily highs around 1.2455, while USD JPY slipped back below 108.00. Meanwhile, in commodities, Brent failed to resume the upside and saw the third day of losses in a row. Oil futures marked their lowest finish in roughly 2 weeks as U.S. government data revealed that domestic crude supplies fell for a fifth straight week, but the stocks were down by less than the market expected and product inventories climbed. Crude stockpiles were down 3.1 million barrels for the week ended on July the 12th. They were forecast to fall by 4.2 million barrels. Potential progress toward negotiations between the U.S. and Iran over Tehran's missile program also put pressure on oil prices. As a result, Brent crude registered lows marginally above $63 and finished around 63.50. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.